Alrighty, so no trades today, but we're going to break down the price action that I posted, or the charts that I posted in my free Discord chat this morning. If you guys want to join that free Discord chat, there will be a link to that in the video description. So what we're going to start with is Euro JPY. This was actually a mistake, so I posted this incorrectly this morning. I think I got confused with something else, a different pair. But what I said was Euro JPY bias is bearish, higher time frame market structure bearish. Price recently came up into a higher time frame level, aka a bearish order block, tested, rejected hard, lower time frame confirmation, aka shift in market structure, fair value gap confirmation. And there I also have marked off some lower time frame levels of resistance. So this one, it was a mistake that I posted in chat. So Euro JPY, the market structure, higher time frame market structure was not 100% confirmed bearish. All right, so we did take out this swing low right here, but for market structure to be 100% confirmed bearish, what else do we need? Well, we need a swing high put in, right? So we got that swing low broken, but we didn't. Did we get a swing high put in after that? No, we didn't, right? So it's not 100% confirmed bearish. So I'm not sure what's going through my head whenever I was looking at this chart. I think what was likely the case was I was looking at another pair and I got it confused with this one, and I accidentally posted this one in chat, or actually I just accidentally said the higher time frame market structure was bearish when it wasn't. So I don't know what happened there this morning on Euro JPY. Just a little mistake on my end, but basically what happened was we traded into this bullish imbalance. See this? I'll post it on there for you because this is what contributed to price having such a nice bounce. So for one, we have this bullish imbalance, okay, traded down to a bullish imbalance, and we also tested a bullish order block. See this? See these series of down close candles? That is all one bullish order block. So you have that order block, you have your fair value gap, price comes down, runs these stops, tests that level, boom, big move. So I mean, no brainer, this thing was bullish. That's just without a doubt, no brainer, it's bullish. So I don't know what was going through my head when I was looking at this morning. Again, I think it was just, I got it confused with something else. But yeah, that was what happened on Euro JPY. And let's see, right here, I posted an intraday chart. See that? So this is a lower time frame level of resistance, these O lows right here inside of the fair value gap on the 30-minute chart. And we actually did have that 4-hour level as well that I posted. So if we go to a 4-hour chart, let's do that real quick. You can see this is that. So we did have a 4-hour level that is valid. Okay. Now again, higher time frame market structure daily chart is not 100% confirmed bearish, right? But we do have that 4-hour bearish order block, higher time frame level, fair value gap confirmation right there. And that's what we did. And we did have a reaction as well. You can see price pull back off of it, boom. So it did respect it for a moment, but then it violated it a little bit later on, right? Because higher time frames bullish, right? We have that fair value gap. We have that that higher time frame trend is still bullish at the moment. But yeah, so we did have a lower time frame level of resistance as well. See this? Remember what I tell you guys, or if you remember, if you watched my support resistance series, you'll know old lows inside of a fair value gap like that, those are levels of resistance, right? So that is a level of resistance. Clearly, it did not respect it as a level of resistance. Again, that's the importance of, oh, and also this is worth noting as well. This is, we have this bullish order block down here as well. So this is a bullish order block. Again, this is one consecutive bullish order block. See these series of down close candles? Okay, again, I want you to kind of think of it like this is where that down move originated at, and what smart money, they want to be buying at, or they want good prices. They want discounted prices. They want the best prices that they can get, right? So this is where, or where that best price was prior to that surge up higher. Okay, and smart money, big money, they don't want to be buying price when it's up here in a premium, right? They want to be buying when it's up here and it's expensive, right? They want to buy it when it's cheap, and that's when it was cheap. It traded back down lower, tested that bullish order block, found support right there, and boom, just rocketed up. So that was Euro JPY. Again, this one was more of a mistake this morning, posting the higher time frame was, like I said, I don't know what went wrong there on the higher time frame, but that was Euro JPY. But I mean, I didn't take an L because it's Monday, and Mondays I usually just sit on the sidelines on Mondays because they're not high probability days, and it's just it's best because the vast majority of my L's are on Mondays. Mondays is where the vast majority is. That's what I've noticed from, or that's what my data tells me. So it's best to just take it easy on Monday. Also bank holiday, so there's that as well. So let's go over this Euro USD because this was actually a pretty clean play. So Euro USD. Here are 3 charts that I posted. So there is a 4-hour chart. See that? What do we have on here on the 4-hour chart? Well, we got a bullish order block, which I have noted with a horizontal blue line, and That's a higher time frame level. Right here, I have a 1 hour chart, and what you can see that I have noted is that 1 hour bullish fair value gap. What is that? Well, that's serving as a draw on liquidity. Because remember, not only do fair value gaps serve as nice reversal points, they'll present you with nice reversal opportunities often, but whenever we have a fair value gap that has not been traded into, it serves as a draw on liquidity. Okay, because remember, that portion of price action right there, it was not efficiently delivered. It is an imbalance. Okay, price does not like to leave imbalances inefficiently delivered. It wants to do so. It wants to rebalance that price action. Okay, so that was an imbalance. I knew that's where price was drawing into. That's where it wanted to draw down lower into. And then we also have that 4 hour level that we were just talking about, that we just noted. That's serving as a draw as well. And we just took out an old high. Again, look at this old high right here. Look at where my little mouse is moving. See that old high right there? So we came up, took out that high, boom, premium marketplace, right? And then we're pulling back off of after taking out that buy side liquidity. Okay, after taking out that buy side liquidity, where's it going to draw to? It's going to draw down to that imbalance. It's going to draw down to that order block, right? And lastly, here is the 15-minute chart that I posted. So even with having that higher time frame level, even with the 4 hour being bullish at that time, you need that lower time frame to be in your favor. So if you're shorting, like this was a shorting opportunity, you need that lower time frame to be in your favor. You need that lower time frame backing you. You need that lower time frame market structure in your direction. Okay, so we had that shift in market structure. Boom, look at that displacement lower. Crack that low. We got your bearish order block right here as well. That is those are your levels of interest. Okay, now let's go down a little bit lower and let's see what I said here. I said 3 charts of Euro USD. So like we've already said, higher time frame is bullish. And that chart on the left is the 4 hour. We have a higher time frame level here coming up. 4 hour bullish OB hasn't tested yet, so that's what it's drawing towards. Once it tests that, I would be very careful with short plays. Why would we be very careful with short plays? Because remember, higher time frames is still bullish. It's a higher time frame level of support. That's why you would want to be careful, okay? And once it comes down and rebalances that price action, well, then it's no longer a draw, right? It's no longer a draw on liquidity. So that's why we didn't want to see that level get tested for a short, or to be good for a short play. Okay, and then I said, since it hasn't tested it yet, make it a nice counter trend trade here. And so yeah, let's go to my charts, or go to the trading view, pull that up real quick. All right, so you can see this thing absolutely got demolished this morning. This pair did. All right, so let's break down this price action. So you can see that horizontal blue line is the 4 hour level that we noted in the Discord just a second ago. So what happened this morning? Well, we had this consistent grind up higher right here. See this, boom, consistently during London session, prices consistently moving up higher, consistently tagging these highs. And then what does it do? Boom, it takes Sunday's highs. It takes that buy side liquidity out of the marketplace. Okay, after we take out that buy side liquidity, what do? We pull back, then we get a little pop, and boom, you get a nice big displacement to the downside. Your shift in market structure, right? So there's your shift in market structure. Did we get our fair value gap confirmation? We did. Remember, premium marketplace, that all this is occurring. That's key. That's key in a premium marketplace while doing this. And this is our point of interest. This is our draw on liquidity. So you see, this would have been your cue to stay away. So if price right here, you see on this leg lower, if price was to trade down into that level, if it was to trade down into that level if it was to trade down to that level and not give you a bounce like this, then I would be very careful with a short play, because then we would rebalance that price action. We tested that level. It's not as nice of a play. But this leg lower right here did not tap into that imbalance at all. It did not test that level at all. And then it curled back up into that range, back into a premium marketplace, tested your levels of resistance, and then you could see it sold off, right? So yeah, really solid short play on that one. Again, once it takes out these highs right here, remember, what does it enter? Once it takes out these highs right here, what does it enter? It enters a premium marketplace. Okay, and what do? We grab our Fibonacci from that low to that high. We find 50%. See how 50% is right here? Look at my cursor. Look where my cursor is moving. So you see, that is 50% equilibrium, okay? Below 50% equilibrium is a discount marketplace. Discount equals cheap, right? And your job is next is to look in a discount where there is either a key liquidity pool or like an imbalance. That's what you want to aim for. So in a discount marketplace, what do we have? We have our imbalance. We have our higher time frame level of support in a discount marketplace. That's what you want to aim for. Okay. You could have aimed for these lows here as well if you wanted to. You would have been well rewarded, because as you can see, this thing just completely got demolished. But I mean, it's easy. We're looking at this in hindsight. It didn't have to do that. It could have pulled down into that level and found support and moved up higher, because that is a bullish order block. It could have very well did that. So when you're counter trend trading, it is important, very important, to lock in some profits. At least I'm not saying you got to take everything off. We all got different styles, I understand, but at least pay yourself in which price enters that discount marketplace, and it enters like a key imbalance like it did here. That it's smart to pay yourself something. So that's what we had on Euro USD. So ES. All right, I'm gonna go to the Discord real quick. Let's pull up Discord chat real quick. All right, so this was the first chart I posted. Obviously, this first analysis didn't play out very well. So I said ES just about hit that 4-hour level of resistance. This is what I'm referring to. You see the spike up right here. It actually just barely missed that level of resistance. Just by a hair, it missed that level of resistance. So I figured it would want to ramp back up into it again. So just barely missed that level on that spike the other day. Price then pulled back, rebalanced that price action. Look at my cursor. Rebalanced that price action from that huge surge, tested a bullish order block. Look at this bullish order block. Look at my cursor. Look where it's moving. There's your bullish order block, and now bouncing. There's your bounce, right? So like I said, not convinced that this is the top. That's what I'm referring to. Look at my cursor. I'm not convinced that that is the top. Likely will run those highs here very soon. Okay, for the reasons that I just said. It didn't even test that level. It just barely missed it. And we just rebalanced this price action right here. We did have this displacement right here, but I'm not convinced, because we also are testing that bullish order block. We also just rebalanced all that price action. I'm not convinced. It's not a very big displacement. And then I posted right here, I said, just clean up that sell side, tap into a bullish fair value gap. That's what I noted. Level of support and 1 hour inbounds a little bit lower. Now, that's not a good level, okay? I posted it because, I mean, it is an imbalance. Still, that is a level of support, but it's not a higher time frame level, okay? I just posted that as an area that could possibly find support at and continue higher, okay? But it is not a higher time frame level. It is not a very good level, okay? Your higher time frame levels, as I always tell you guys, your higher time frame levels are your best levels, without a doubt. Okay, those are your money makers. Those higher time frame levels, 4 hour and up. All right. So, and you can see I said ES pulled the rug. Next higher time frame level we got. We'll see if we can get a reaction here. What I have noted there is a 4 hour bullish order block. I said still bullish though, even with it pulling the rug. That level you see a little lower is the daily old high. Okay, so again, my bias on it remained bullish, because I figure it's just a matter of timing it, right? Again, those were lower time frame levels. They weren't significant levels of support. Okay, so we're not gonna get stuck on those lower time frame levels. We're just gonna readjust our focus and find that next key level of support. That's right there. That is the next key level of support. So let me clear off this level and that little fair value gap right there, because that was the level that didn't hold this morning. And you can see price then did what? It came down, it cleared out these lows, and it tested that 4 hour bullish order block, that level of support that we were talking about, right? Let's let that 4 hour chart load real quick. Boom, there we go. So you can see we had that 4 hour level right there. That's a higher time frame level of support. Okay, did it violate it a little bit? Sure, but that's still the level, and it held that level. Okay, now why did it violate it? That's the next question. You always need to be asking, why did it do that? Why did it violate that level? Why did it sell off a little bit deep right here? Why did it do that? Well, that's where you utilize your lower time frame, okay? Because usually what's the case, it's usually an imbalance. So we'll go to the 15-minute here in a second, but right here on the 15-minute or on the 1 hour, you can see you got this fair value gap right here. See that? We rebalanced all that price action right there, okay? So there was where that if you look at that horizontal orange line, that was where the order block began on the 4 hour. But again, remember, whenever I post something like that, I'm not saying that price is going to turn on the dot right there. I'm saying all I'm indicating is that is where it is beginning. Okay. Now, what you want to do next is you want to utilize some lower time frames and identify, see if there's a fair value gap in there, because many times there is. And those fair value gaps inside of that order block is many times where price is going to draw down into. Okay, why? Because it's an inefficiency. It's an inefficiency. Price doesn't like to leave it like that. So we cleaned out those lows. We rebalanced our price action. Let's go to the 15-minute, because I believe we had some on the 15-minute as well, if I'm not mistaken. Yep, we sure did. So look right here. See this? You see that 15-minute? Right there, right below that 1 hour. That was that 15-minute imbalance in inefficiency in price. So boom, we rebalance that, boom, we rebalance that, boom. Okay, and then we turned and we found support. So I mean, the analysis played out perfect. I mean, that's exactly or what I thought it would do. It didn't have to. I want you to also note something else I said. I think I noted that on Twitter. But basically, in short, what I said was wait for a reaction. Wait for a reaction off that level. Price does not have to do anything price does not want to do. It's going to do whatever it wants to do at the end of the day. Your job is to plot these levels and then wait and see how price reacts around these levels. That's it. That's all you can do. You can't force price to do anything. You just got to let it tell you what it wants to do and then play it accordingly. So we tested that level. Boom. We rebounced our price action. Boom. Now we need our lower time frame confirmation, our lower time frame shift in market structure, right? So let's see, 15-minute. We got it. Well, we took out that high right here, but we didn't have any imbalance in here on the 15-minute chart, or until right here we didn't. Or we have here on the 15-minute now, but down in here we didn't have anything on the 15-minute, no imbalance really. And the 5-minute chart, let's see. Right here we did. See this? See that little imbalance right there? If you look at my cursor. We came down into that, found support, and then gave a nice move up right there. So if you were a scalper, or if you're a scalper, that could have been a play for you very possibly, because I mean, that's your confirmation. See that fair value gap? And then we took out that high, and then what we do, we traded back down to a discount marketplace. Well, we did turn into a discount from this low, but let's look at this low right here prior to the imbalance. See that swing level? We traded down to a discount. We rebalanced that price action. We found support, and then boom, took out that high. So if you're a scalper, I mean, that's a nice scalp play. I mean, that's right there. That's a nice scalp play if you were to do so. Now, if you were looking for like a home run, for example, and say you didn't sell at that high, say you decided to hold it, and you were looking for it to come out and take out these highs up here, you know, swinging for the fences. Well, then you probably would have got stopped out on it if we're being 100% unbiased here, or being 100% looking at this in a rational way, because you see this move right here, this stop run right here. Well, it violated that imbalance, and that's one of the best places to keep your stop. As I've said in my video, the best place to keep its stop loss is underneath the fair value gap. So if you were to keep your stop underneath the fair value gap, for example, well, you would have got taken out right there. Okay. Now, if you were to keep your stop underneath of the low of that key liquidity grab, aka your move that happened right here, like basically where price found its exact bottom. Well, with that being the case, you would still be in it, and you would have took advantage of this huge move higher, right? That's if you were to go with that as your stop. And I stated that in some of my past videos. Like I said, your best place to keep a stop is underneath of the key liquidity grab. Okay, you want the fair value gap as well. Sure, you need that lower time frame fair value gap confirmation, but the best place, safest place to keep that stop is underneath of that key liquidity grab. Okay. So if you did keep your stop right there, for example, you'd still be in it. You'd still be riding this thing up. So it kind of depends on how you would want to play it. But I mean, the analysis, it held up perfectly. Or I'm not going to say perfectly, but it respected the level. It rebalanced its price action, and now it's headed up, which is what I thought it would do, or what I likely thought it would do. And now it's likely what's it going to do next. It's probably going to come up, take out these highs. That's likely what's going to happen.